Hello dear students, welcome to Devika's Commerce and Management Academy. Today we will see one problem without journal entries. Simply ledger accounts we can open by reading the problem. Very easy, and the problem is given on the desktop. You can note down or can take a screenshot. So let me read the problem first, then after that we'll see the solution. What they are saying, balance sheet of Vanish Limited as on 31st March 2009 was as follows. Only one balance sheet is given. Whose balance sheet? Vanish. Assets are fixed assets, cash at bank, other current assets, profit and loss account. Profit and loss account, remember always, if it is given on the liability side means it is a profit. Assets side given means it's a loss. Remember this point. And on the liability side, for 4 lakh equity shares, 10 rupees each, means total shares are 40 lakh and current liability is 10 lakh. Now coming to the adjustments, Shine Limited agrees to purchase Vanish Limited. Shine Limited agrees to purchase Vanish Limited. Means Shine Limited is here purchasing, okay, and purchasing Vanish Limited. Vanish Limited is here vendor, transferor, Vanish Limited, transferee, Shine Limited, okay. Shine Limited is agrees to purchase Vanish Limited for a price of 34 lakh rupees. 34 lakh rupees purchase consideration amount is given. Discharge of purchase price means how they wanted to make this purchase price. That is, discharge of purchase price is done through issue of 3 lakh equity shares. 34 lakh they have to pay. How do they want to make the payment? 3 lakh rupees through the equity shares at the rate of 10 rupees each of Shine Limited at an agreed price of 11 rupees. Actual price is 10 rupees, but they are agreeing to make the payment of 11 rupees per share. Balance in cash. Okay. Now prepare realization account, Shine Limited account. Shine Limited means transferee, and shareholders account in the books of Vanish Limited. 3 accounts we have to open. So I have already prepared these 3 accounts. One is realization account, Shine Limited, that is transferee, and equity shareholders account in the books of transferor. Transferor is here Vanish, in the books of Vanish. First of all, mode of payment try to understand. Purchase consideration is how much? 34 lakh we know, and 3 lakh equity shares they wanted to pay at the rate of 11 rupees. This is they have to pay 3 lakh equity shares they wanted to pay. First of all, 3 lakh equity shares at the rate of 11 rupees premium. Actual price is 10, but they wanted to pay 11 rupees. 3 lakh into 11 rupees comes to 33 lakh. Rest of the amount in cash. Rest of the amount means 34 lakh minus 33 lakh. Rest of the amount is 1 lakh. 1 lakh they wanted to pay it as cash, balance in cash. Total amount is purchase consideration is 30 lakh only. Remember this mode of payment. Okay. So mode of payment is 33 lakh equity shares and rest of the balance 1 lakh is cash. Now first we will focus on the realization account. Very easy. First entry is realization account, all the assets to be transferred on the debit side. Realization account to various assets account, this entry you know. So realization account debit side we are writing all the assets which are given on the asset side. One is fixed assets 24 lakh, it's written here. Next current cash at bank 1 lakh, then other current assets 21 lakh. We don't touch profit and loss account, this is loss, not asset. Profit and loss account of last year. So what we have assets debit side, only 3 assets which are given in the balance sheet. Assets transferred. Next second entry will be always transferring of the liabilities. Liabilities, outsider liabilities. Outsider liabilities means we have only current liability 10 lakh. So this current liabilities we are transferring on the credit side. Debit side assets, credit side liability. Apart from transferring of assets and liabilities, we have one entry. Purchase consideration, that is purchase consideration due. Purchase consideration is how much? 34 lakh. To whom they are going to make payment? Shine and Company. So Shine and Company. The entry will be always Shine and Company account to purchase realization account. That is purchase consideration due entry, right? So this is purchase consideration due. Only 4 entries. Only 3 entries only. One is transfer of assets, another one is transfer of liability, and purchase consideration due. That's all. Nothing else. We'll write it in the realization account. Now we have to close the realization account. Debit side is more. It is 46 lakh. 46 lakh minus these two. 44 lakh. It is coming to 2 lakh rupees. Always remember, realization account, whether you get a loss or profit. Loss means credit side. Profit means debit side. Whatever it may be, loss or profit, that is to be transferred to the equity shareholders. So balancing figure transferring to the equity shareholders. What it is? It's a loss. Who will bear? Equity shareholders. Am I clear about this realization account? If it is clear, we'll go to the next. Shine Limited. Shine Limited, simple, remember that he has to make payment of 34 lakh. How he is going to make the payment, that is what we are going to show it in the Shine Limited. Shine Limited is a transfer. Transferee has to make payment of 34 lakh. 34 lakh when he wanted to make payment, you know that due amount is we have written on the debit side, credit side of the realization account. 34 lakh. Transfer it. Credit to debit side. Shine you are finding the credit side means here it comes on the debit side. Shine account, we are writing realization account. What is purchase consideration due? PC due. This entry you write first. Then 34 lakh, how he is going to make the payment? That will be on the credit side. Through the equity shares, 33 lakh. Rest of the amount through the cash. Okay. So, settling. Due is this much. Paid 33 lakh equity shares. Rest of the amount 1 lakh is cash paid. That's all simple. So nothing to worry about the transferee. Transferee is here due how much? How he is paid. How he has paid. That's it. Now coming to the equity shareholders account. Please be careful. Equity shareholders. First of all, equity shareholders. How much it is? 40 lakh rupees. Equity shares always we have to write it on the credit side. Equity share capital. Equity shareholders credit side will write. This entry is Pakka. With this entry only we are going to start the equity shareholders account. Okay. Now debit side will write this one. First of all, loss is there. Loss we are transferring to equity shareholders. Na? There we have learned loss is transferring to the equity shareholders. So from there to here we have transferred 2 lakh rupees. There is another loss in the balance sheet. Asset side it is given profit and loss account 4 lakh. That is also loss. All the loss is going to borne by the equity shareholders. So 4 lakh also I have written here. Then after that, making a payment, equity shareholders are getting a payment of 33 lakh. How they are getting 33 lakh? Through the shares, and rest of the 1 lakh as a cash. Equity shareholders are getting 33 lakh rupees of shares and cash of 1 lakh. Mode of payment, the same one, 33 lakh and 1 lakh. 5 entries we got. When we complete all the entries posting, it has to tally equity shareholders account. If it is tallying means problem is correct. Just like balance sheet. It's not balance sheet but just like balance sheet. Equity shareholders account, it has to tally. Tallying means the problem is correct. Am I clear about this problem? Simple, nothing to worry. Only the thing is that realization account, you know, PC given or not given, but mode of payment remember. Realization account we have opened. What are the entries? Realization account, transfer of assets, transfer of liabilities and PC due. Only 3 entries. There we got the loss. Loss is transferred to the equity shareholders. Then after that, transferee account, Shine. So how much he has to get a payment? 34 lakh. So this is written on this one, same one. Shine Limited we said already. So Shine is debit side, it comes credit to debit. Realization account 34 lakh. How he is getting the payment? So he is making a payment 34 lakh, 33 lakh shares and cash. Then equity shareholders account. Very simple. equity shareholders account also, equity share capital we are writing on the credit side. Then debit side, realization account loss is transferred to the equity shareholders, that is transferred. Profit and loss account is also, loss is there, that loss is also transferred to the debit side, right? And rest of the things are payment. Equity shareholders are getting a payment of this much through the shares, equity shareholders in Shine Limited, and through cash. That's all, easy. Okay, screenshot. Yes, hope it is clear. Take out your textbook, try to work out more problems, you get more confidence. Stay connected, check out the playlist of our channel, and don't forget to share this video. Sharing is caring. So next class we'll work out another interesting problem. Till that period, practice well. Good luck.